Our panel discussion and the audience question and answer portions of the program will be moderated by our very own Stephen Ganote. Stephen is a managing director of Avascent, and he's been with WSBR as a board member for over 5 years, and we really appreciate Stephen's being here today. Moving on to our speakers, it's my absolute pleasure to briefly introduce each of our satellite industry leaders and financiers. So I'm going to start with Mr. Stephen Ananias. Stephen, Vice President of Finance at Rocket Lab USA. Hi, Stephen. Next, we have Mr. Tom Fitzpatrick. Tom, Chief Financial Officer at Iridium Communications. Hi, Tom.
Hi.
Mr. Chris Quilty, founder and partner of Quilty Analytics. Hi, Chris. Mr. Mark Quinn, Chief Executive Officer at Willis Towers Watson Global Inspace. Hi, Mark. And Mr. Jim Simpson, Chief Strategy Officer at Virgin Orbit. Hey, Jim.
Hi, Sally.
So in order to maximize time for our discussion today, we're going to include a link to the full bios of each of our panelists in the chat box. So please take a look if you want to learn more about their backgrounds. And with that, it's my great pleasure to pass the platform over to Stephen to kick off today's discussion. Thank you, Stephen.
Thanks, Sally, and thanks everybody for joining. What we're talking about today is financing the next generation of space technology, and we couldn't have a better panel to talk about that. We've got folks who've done this and done it at scale. We've got folks who are in the middle of doing it, and we've got somebody, Chris Quilty, who we'll talk to in just a second, who has seen financing across the space industry for years, and we've got Mark, an insurer, who helps insure and make sure that that what we put up on orbit is secure and that financial risk can be mitigated and planned for. So the first question I think that we want to talk about, Chris, is if we look at space financing now, when we look over the last few years, it's been a great run. Right? Like none of us have seen this much capital raised in this industry in our careers. And it's going real well. If you read some of the numbers, $10 billion or more of just the last 12 months were raised. But Seraphim puts out a pretty good summary of what's going on. And for the first time in a few years, we've seen a downtick. Last couple quarters, not a big one, but a little bit of a downtick. How significant is that? And especially when you take that in light of some of the performance, the stock price performance of some of the space SPACs. When you look at the industry and you look at where financing is going, is that a notable downturn, or is that something that you think is more of a blip and the run that we've been on is going to continue?
Yeah, so there's a lot to unpack with that question, both in terms of timing and whether we're talking debt or equity or SPACs or venture capital, and I don't want to hog the time, so I'm not going to go into all those in detail. But I think the important thing to keep in mind is, yeah, if you bought a bucket of SPACs last year, you're not so happy. But in the longer term context, the funding availability for the space industry today compared to what it was 10 years ago is night and day. If you look back prior to 2015, which was sort of like a tipping point year for the industry, prior to 2015, you would see on average, less than 10 space companies globally funded. And the total over the prior decade had been on average about $140 million a year. Since 2015, you're seeing dozens of new startup companies coming in the market. I think the number is north of $1.5 billion a year of funds flowing to startup companies. And that's if you take out the big mega constellations like SpaceX and OneWeb. And so from that perspective, the big concern that I've been expressing in recent years was, a lot of investment coming in the industry, but no exits. And 2021 was sort of a watershed year. You had 13 companies come public, mostly via SPAC transactions in the last couple of years. And that's produced some good outcome for early investors, which means, you continue to see new funds coming into the market. Yes, we've seen a bit of a downturn and certainly in the SPAC market, but I don't think if you compare the outcome of space SPACs versus other SPACs in different industries, whether it's air mobility or biotech, there hasn't been a terribly different outcome in terms of that investment class. Will there be funds going forward, which I think was your final question? Look, it depends on the markets. Part of the downturn in funding that Seraphim pointed out was overall market related. We've probably all seen our portfolios go down and up in rapid fashion. I guess if you count COVID twice in the past couple of years in a way that we're not used to. And part of the funding stream will depend on how well the overall markets hold. And of course, there's specific to this asset class of space is people want to see some good outcomes like revenue growth, generating profits amongst the companies that have recently come public.
Great. Thanks, Chris. Jim Simpson, you are front and center in everything that Chris was just talking about. You just had a big $280+ million raise late last year from a mix of sources. You got to ring the bell on Wall Street earlier this year. And you've got a lot going on with successful launches and other things at the company. As you look at where you're going next over this next year, and the capital raise, probably you were targeting a little bit higher, but you still got a good number. What are you looking to do, and what kind of capital do you need to raise? And related to that, was the raise last year and into early this year sufficient for what you're looking to do?
So, by the way, the raise was sufficient for what we planned on doing initially. Would we like more? Yes. And in fact, that's something that we're continuing to work, rather aggressively on pursuing. We had to have a minimum raise, and we obviously achieved that. Otherwise, we weren't going to be going public, and we did achieve that. And frankly, it was an incredible time. I don't know if anybody really could appreciate that we were going public, ringing the bell, having a launch vehicle in the middle of Times Square. And oh, by the way, the next week and a half, we were going to launch another launch vehicle. So, I mean, it was an incredible time. And we've been really, ever since then, been full bore. We're continuing to ramp up the amount of launches per year. We have been entering into additional markets, missile defense targets, hypersonic experiments. We've been working with a couple of our pipe companies, Big Bear, Artificial Intelligence, and Redwire, to be entering the space solutions segment of the business, as we discussed. And then one of the biggest areas and the most exciting areas based on our system is being able to basically create spaceports and space systems now all around the world. We're about ready to launch in June within the United Kingdom. And that's I'd say, and it's the incipient phase of several spaceports that you'll be seeing around the world using Virgin Orbit. So, did we get enough? We got enough to start. Do we want more? Yes. Okay,
great. Tom Fitzpatrick, Iridium was a SPAC before SPACs were cool. You're a success story in the industry, and one of the early ones, as Chris talks about. It was a different world for all of us in 2010-ish when you were raising, I think, $3 billion. You said for the next constellation, the first fully financed constellation that Iridium launched. As you kind of look back on that, can you think, and maybe describe to our audience the mix of sources you used, especially significant sources, because I know it was pretty diverse, and any of the biggest barriers or success stories within that raise?
Sure, happy to. So in 2010, Iridium had cash flow EBITDA of something like $135 million. So, traditional financial markets would say such an enterprise couldn't finance a $3 billion capital program, which was the cost of our next generation constellation. Well, here we are in 2022, and we completed that construction project in 2019, and today we have a market cap over 5 billion, 5x where we were in 2010. So it was financeable. And the way that got done, the centerpiece of the financing was an export credit finance backed by the French state in support of the manufacturer of the new constellation, a Franco-Italian company by the name of Thales Alenia. So the French government financed, put up a $1.8 billion facility that was tailored to the company's needs. There would be nothing like it in traditional financial markets. It was tailored to the company's needs, and it took on risk that traditional financing wouldn't undertake. Risks of the existing constellation, would it last long enough for the new constellation to be put in place, and various other risks. And I think central to the thesis of the lenders at the time, or the French state and the lenders who the loan was syndicated to, was the fact that Iridium, by virtue of being a SPAC, was a public company and could access the capital markets if risks manifested themselves over the construction period. And in fact, risks did manifest themselves. There were delays in the construction. There were delays in other assumed sources of financing in the plan that was agreed with the lenders, and we did access the capital markets for complementary financings alongside of think of it as the foundation financing supported by the French state. And so we did a couple of tranches of convertible preferred. We sold some equity in 2014, at $6. We didn't like that, but we did it. And every one of these, think of them as complementary financings, were done with some concessions from the lenders along the way. And so the final thing we did was a high yield bond, a $360 million high yield bond that we put in place. And we've since, in 2019 and early 2020, took out the French facility because it was very restrictive, and we also took out the high yield bond. And today, in 2022, our interest expense will be about $60 million. That's down from $120 million where it was in 2019. And so, that's kind of the story, if you will.
Yeah, that's great. And I just checked your stock price, and you're trading 40-ish right now. And
yes,
as you mentioned, you got, I think, close to $5 for a while. You had to sell some equity at $6. So
yep.
It was dicey times, but it's all paid off. So I think that's a great story. Quick follow-up question on that. Were there any, other than the COFAS French government financing, were there other particular investor classes that you went to in some of the dicier times, or was it all mixed?
Well, it was opportunistic. So why did we issue the convertible preferred early on? Well, we didn't have the public float in the equity to raise enough capital in size. So we needed a couple $100 million in two tranches of convertible preferred. The convertible preferred market was there for us. We accessed that market. I think the equity was really the lender's preference. It wasn't our preference at the time, and so that was a negotiated thing. And similarly, the high yield bond, we have a hosted payload that we're very excited about, a company called Iridium, that will revolutionize international air traffic control. It's a groundbreaking company, but it was delayed in kind of their proceeds coming out. So we had to access the high yield market, which was receptive to our offering. But again, that was a negotiation with the senior lenders in terms of where in the capital structure that debt would come in. So it was really multiple renegotiations of the central credit facility that were undertaken opportunistically in terms of which financing sources were available at the time, given the company's circumstance at the time.
Great. Thanks. Stephen, you're kind of living that life right now at Rocket Lab, doing a lot of interesting things. Like Electron's done very well recently. I think you count over 100 satellites now in orbit off of successful launches. You are building Neutron and doing that in Virginia, at the Wallops Island. So a very interesting build. It's going to be a reusable middle range rocket. You're also doing satellites, you're also doing services. It's a lot going on at the company. Where, as we think about financing over the next year, what's going to be the biggest draw on capital, and where are you going to get that capital?
Well, you highlighted really the core where we're going to be focusing our investment over the next next year and year plus, really. So, our vision here at Rocket Lab is to be a best-in-class end-to-end space company. And we believe that starts with launch, right? So you mentioned Electron, the success that we've had with that launch vehicle. Last year we announced Neutron. As you said, we feel this is a next generation launch vehicle capable of delivering more than 8 tons of payload to orbit. We're very excited about this project, and it's, as you said, it's designed to be reusable from day one. It's really what we view as the constellation builder, and related to Neutron, we announced last month, as you mentioned, our partnership with the Commonwealth of Virginia, where we're going to be building a new production facility and operations facility there for Neutron, as well as the first launch site for the Neutron rocket. So we're very excited. In fact, we're having our groundbreaking in Virginia next month on April 11th. So we're very excited about that. In addition to launch, though, in the theme of this end-to-end space company, we're making tremendous investments in our space systems business. We announced last month a new contract with MDA to build 17 satellite buses for the Globalstar LEO satellite constellation. We also have contracts with Varda Space and the Escapade missions to Mars, right? So we have a lot of business that we're winning, and we need to invest in the manufacturing facilities to support those missions. We're also looking at expanding our manufacturing capacity within our component businesses, whether it be reaction wheels, star trackers, satellite dispenser systems, now solar panels, satellite solar panels. So there's, as you said, there's a lot going on, and we are absolutely all in supporting these businesses and investing in the growth that we're going to see in these businesses.
Great. Quick follow-up on that as well. I mean, that like you said, that's a lot and a lot of very interesting stuff going on in one relatively new company. From a financing standpoint, just kind of looking at that, are you going to need to issue more equity? Are you going to raise more debt? Or are you looking to, kind of start drawing off some of that backlog that you're building to finance? What's that mix look like over the next year?
Sure. So, we were very fortunate in our SPAC transaction. We were able to raise $777 million through the SPAC. That was more than sufficient for our organic initiatives, whether it be Neutron or some of the organic space systems investments that we're planning on making or that we are making. We knew at the time that we really wanted to be able to accelerate our entry and growth in space systems, and that was going to be done inorganically. And so, since our de-SPAC in August of last year, we actually acquired 3 companies now. And so that's definitely consuming some of that capital that we raised. But in terms of going forward, we feel like the capital that we've raised is sufficient. That being said, if there's an inorganic opportunity that pops up where it may necessitate additional capital, then we'll look at it at that point.
Great. That's a nice position to be in. So enjoy it. Mark Quinn, you at Willis, your role is to evaluate risk and help ensure a lot of these ventures. You've been doing it for a long time. Maybe the newest and most topical area of risk to space is what's happened between Russia and Ukraine, the war there, the Soyuz, the threats to the space station, supply chain interruption, potential anti-satellite threats that are now being talked about in a whole different context than they were just 6 weeks ago. As you look at this and kind of day to day in your business, as you talk to your clients, what's the biggest disruption threat to the space business that you see, whether it be the rockets and launch vehicles, whether it be new constellations? Folks you're talking to, where's that risk the greatest, and what's changed the most since the invasion?
Well, it's certainly all changed very rapidly, right, over the last 4 weeks or so. And I'll talk about it from a macro position of the market. And I think there's some impacts that are both direct and indirect. And I'll talk about it from the perspective of how certain things that have happened are impacting the space insurance market. When you think of the space insurance market, think of it in terms of a global market that needs to have, it's considered a catastrophic market that expects to have a certain amount of claims, and it's an okay market for an insurance company to be in, as long as the amount of business they write generates enough premium to cover those claims. So the market has corrected itself a couple of years ago because the overall global premium volume got too low. It got down below 500 million. The market ideally would like to be up at about 750 million globally per year, and it was working its way back up to orders of magnitude expected to be about 600 million or so this year. And that's an important number I'll use as a reference. But some of the direct impacts have been the sanctions that have been imposed. Most of the insurance companies that write space insurance are in the US, the UK, or Western Europe. So they're subject to those sanctions that have been imposed by those various governments. So the insurance market is unable to insure direct Russian risks. Depending on whose estimates you use, that could reduce this year's premium income anywhere from 10 to 20%. So think about that. That 600 million could come down to 550, 500 million, which is sort of the market break point of where it wants to be. So that's sort of the first direct impact in terms of premium income. The second one that could impact market results are claims. There haven't been any yet, but the whole issue of cyber hacking, an ASAT test, like you said, any sort of war, terrorism action, could cause damage to satellites. Some of those types of exposures are excluded, but it certainly raised those risks front and center. Obviously not just for insurance companies, but also any operators that are flying satellites that might be subjected to that sort of stuff. But I would say sort of the single most significant concern, and you talk about disruptors, right, is the whole question of supply chain, right? Obviously, OneWeb had to go off of the Soyuz. You've got a number of different launch providers and satellite manufacturers that use Russian components that rely on them, and they've got some in inventory, but they don't have an indefinite amount. So what's going to happen when that current inventory runs out? And then one thing that a lot of people don't focus on a lot is the Antonov. So the Antonov is the large, I don't know if it's the largest, but it's among the largest of the cargo aircraft that a lot of the satellite manufacturers use to transport their spacecraft to the launch sites. Some of those have been destroyed. The other ones that are still in service, one's owned by a Russian air cargo company, so they can't use that. And I think the other ones that are available are being used to support the war effort. So they're just not generally available, and you have potential launch delays that come into play and could push out some of that premium income for this year, into next year, and could impact the overall market results. So those are some of the direct and indirect impacts on the market. As I was thinking about this situation, it's similar to what happened back in the late in the mid 80s, right? When the U.S. brought the shuttle on, it was going to be the primary heavy lift vehicle for geosatcoms to orbit. After the Challenger tragedy, President Reagan said no more commercial missions on the space shuttle, and U.S. industry didn't have heavy lift vehicles readily available. It took a several-year transition period before some of the U.S. providers came on board, and that sort of created an opening for Ariane to establish a lot of large market share with the Ariane 4 at the time. And I think we have a fairly similar situation here. depending on what happens with Russia and with the trade with some of these Russian suppliers, are things going to come back online, and companies are going to be able to use those Russian components, or are some non-Russian suppliers going to be able to seize that opportunity and create market share that they're going to be able to capitalize on? And I think that's a part of, I don't know if to call it a disruption so much as an opportunity and a transition, and how that plays out is going to be determined probably by how quickly things get resolved, between in Ukraine with Russia.
I think that, Mark, I think it's a really interesting point if we think about reshoring and all of the COVID-related supply chain interruptions that have caused rethinking outside the satellite industry across most industries. To tie this to that is very interesting. And just for the audience, if you haven't seen the Antonov, I think it's the largest plane in the world, right? Google it. It's worth taking a look. And that, it's an important part of the supply chain for moving via place to place by air cargo, because it's hard to do by ship and by rail. So Mark, I'm sorry, were you going to say something?
No, I was just going to say space. I mean, there's a lot of obviously international cooperation and a lot of different industry sectors, right? But space is really the poster child for that. And even with all of the, the conflict that's going on now, just the fact that you had a U.S. astronaut got, repatriated yesterday, I think, or today maybe, on the Soyuz speaks to, really the manifestation of that international cooperation.
Yeah, no, I think it's a great point. Quick, just clarifying question on, if you do launch plus 1 year, kind of a standard, standard term for insurance, in that 1 year, if there's an ASAT event, right? If there's a kinetic event against a satellite, is that considered a force majeure, or are you insuring that? Is that insured, or is it unclear?
It would most likely not be insured, because it would be considered an act of war, terrorism. I mean, if it falls into that category, those types of activities are excluded from coverage in the policy.
Great. And that would include, business interruption for the jams Viasat satellite or terminals in Ukraine, things like that.
It depends on the basis of the insurance, right? Depending on whether or not the buyer was insuring that part of their financial exposure or not, versus just covering damage to the asset.
Great. Thanks a lot. Okay, well, going back, if we look, Jim Simpson, if we think about the current satellite context and the financing context as Mark was saying, kind of some of this ties back to disruptions we saw in the 80s. But also, as Chris was saying, we've never seen it so good in terms of the number of public companies, number of private companies, amount being financed. If you look back and kind of think about the industry and how it's evolved, are there one or two big changes that you've seen that are most material, either for Virgin Orbit or for the rest of us? Could be financial in terms of access to capital, could be technology, kind of what Mark was saying, supply chain. But thinking about your history, Boeing, ABS, elsewhere, kind of as an executive now versus an executive 5 or 7 years ago, how do you see changes in the industry?
Well, I think that the biggest change in the industry right now is, I'll say, not the mobility, but the speed of how things are moving forward. And I also the amount of new entrants. And I think that all of that has to do with something that's really, people don't really, actually probably a lot of people fully appreciate it, but let me just tell you what I fully appreciate, is that the technology relative to small satellites has dramatically changed in the last 4 years. I mean, the ability to have the new integrated circuits, the steerable electronic antennas, electric propulsion, a multitude of different capabilities to be able to change the planform dramatically to a much smaller planform has been dramatic. And because of that, it has opened up a significant amount of activities that you see going on in the LEO world. And as obviously having the Virgin Orbit system, And it's a rather unique system that it provides the ability to go to various inclinations. It's able to be rather weather resistant and actually to be quite mobile as well. The combinations of those satellites and the launch systems are allowing an opening of responsive space and the ability to utilize space much more rapidly. And frankly, you're starting to see the need for that with what unfortunately is happening right now in the Ukraine, where there's much more of a demand for overhead, persistent Earth observation, et cetera. And quite frankly, the capabilities that we're starting to see emerge uniquely are capable to accommodate that. And we're starting to see that now. And I think you're also seeing that with the operations and maintenance activities required for a lot of the large constellations, although it hasn't emerged as much yet, you're going to see that requirement to be able to fill gaps quickly. And the new technologies enable that to happen. I think that's a really dramatic ability to be able to go from concept to delivery in a rather rapid time frame. And we're talking, months to a year versus years. And that is a huge, huge change.
Yeah, I think that's a great point, Jim, and something we, kind of to pick up on that, a couple of things we talk to our clients about is one, the barriers to entry to space, kind of to your point, are way, way down relative to what they used to be. Technology, your own company in terms of launches, Stephen, your company as well, and then the speed of that, right? Innovation and deployment of innovation is really interesting.
I'll even add one additional aspect that's actually not totally space related is the activities going on in data analytics and artificial intelligence to be able to provide fuse multi-data capabilities is dramatically changing how we look at how to use space as well. And I think those are all coming together to create quite an end-to-end capability.
Yeah, I think it's great, a really great point. And kind of, to pick up on that a little bit, we were talking internally, and you think about Maxar and Planet becoming, household names because they're in the bottom right of all those images you see coming out of Ukraine, and real-time positions of military, or not quite real-time because of legal delays, but it's pretty amazing how space technology is being deployed in real time to the general public in a way that really was never appreciated before. So I think good point. Tom Fitzpatrick, let me ask you a question. On the financing side, we're talking about how the industry's changed. The capital raise you described in such excellent detail was, really interesting, kind of game changing for the industry, right? LEO had never really succeeded at scale, right? And you guys raised the money for it off a pretty low revenue and EBITDA base. You did a lot, you mentioned a lot. Is there anything you would, like, looking back with hindsight on capital raise, and I'm kind of thinking this could apply to some of the newer companies as well, but are there any lessons learned or things that you did particularly well that you say, hey, this really worked out? Things you got lucky on, or things that you would never do again because you had to do it, or you did it and you kind of learned from it. So any lessons learned?
For sure, we're not going to raise equity at 6 again. And that was a feather in, there's things you have to do because you have lenders, right? So, but all in all, the COFAS financing, the export credit financing was, as I said before, tailor-made to our needs, and so I would do that again in a heartbeat. It was what got our constellation built. Probably had to renegotiate it, I don't know, a half a dozen times over 6 years. And when you do a renegotiation with your lender and you're a public company, that comes with like really lousy disclosure that you have to make, and none of that is fun. But when you get through the other end, it was all kind of worth it. And having said that, just about the minute we completed our constellation in 2019, we were keen to take that facility out because it tied us up and had really big principal amortization, and replaced it with a term loan B that is 1% principal amortization. You can reprice it every 6 months, and so there's different financings that are appropriate for an enterprise at different times, and I think it's just incumbent upon management to avail themselves of the financings at the appropriate time.
Stephen, maybe a similar question for you in a more recent term, right? As you said, you had a very successful SPAC raise that you described. You're at a point where you're kind of you're now funded or fully funded for your organic planned activities. Was there anything that went particularly well or anything you did that you would say is a success story that got you where you wanted to be? Kind of what Tom was saying about that mix, but you had one big raise. Tom had put together a bunch of different ones. But any kind of lessons learned for folks or a success story that people can hear about?
I don't think what I'm going to say. I don't think this is unique to Rocket Lab, but I think from the very beginning, Peter Beck, our founder CEO, he believed and believes today that say what you're going to do and do what you say, right? And it's amazing how much easier it is to raise money when you do that, right? So when you go and you raise money and you tell the investment community that these are your plans, and you don't set the expectations so high that they can never be achieved, but you actually set reasonable, practical expectations, and then you achieve them, and then you go back to raise more money. The money is there, right? And so I think we've had a lot of success with that model, and that's something that we live by today in everything that we do.
Yeah, I think it's a real good point. And Chris, you're one of the people listening when Peter and others are making promises that they're hoping to keep. Is that, do you feel that way kind of across the industry? Do you feel like the expectations are reasonable that are coming out of both, pick a sector or pick a type of company, but for the publicly traded companies that you're looking at, do you see that happening? And then maybe a related question is, how much are public markets versus private markets, and how much will debt versus equity kind of play into this next phase of 22, 23 satellite financing, space financing?
Yeah, I will note in Tom's answer about their financing strategies, the absence of the mention of the awesome research coverage that they had playing a critical role. But yeah, so it's interesting, right? I think private companies have different expectation standards versus SPACs, which are sort of a transition vehicle to public companies. And what I would say is investors are sophisticated enough to understand, guidance figures and assumptions and how you size the TAM. There's a little bit of game playing in all of this. And, if you're the one guy in the room that doesn't understand, well, that's, you're the sucker, right? And hate to use that in terms of financial and investing perspectives, but certainly with institutional investors, they understand the guidance and the role it plays in terms of setting expectations for the street. When you talk about the availability of capital, I can give you an answer today of is funding going to be available, but it'll be an entirely different answer I'll give you in 6 months or a year, because the financial markets are dynamic. And, if I wind back, we were talking about venture capital. Back at my old firm, we did the very first ever venture capital space financing conference. I think it was back in 2013. And if we had 20 speaking slots at the conference, we literally couldn't find enough private venture-backed startup companies to fill the speaking slot. So I had to invite public companies to fill in the agenda. I mean, it sounds crazy, right? And now we look at, I guess probably about 4 billion or 5 billion last year going into startup companies. Will that last forever? Or will you see something happen like what happened with the alternative energy industry, back 5-10 years ago, where it just vaporized for a number of years? Hope that isn't the outcome that we see. But remember, private equity, if you went back to the 1990s, the space industry was the plaything of private equity, mostly the Inmarsats and Intelsats of the world, these that they could highly lever. And, that trade sort of faded private equity left the scene and really was not a major player in the space industry until the last several years, where now you're seeing a different flavor, which are sort of more middle market private equity firms doing roll-up strategies that have become pretty common now. So and in the public markets, as Tom mentioned, we did the Iridium as a SPAC, 2009, like crazy time to do a SPAC, and it went well eventually. But SPACs as an investment vehicle just were off the radar, like totally off the radar for almost a decade until they came raging back. And, we're seeing signs that investment vehicle is getting a little long in the tooth now. But there's literally hundreds of billions of dollars of cash in trust in SPACs that are waiting to be deployed and have to be deployed in a time certain basis. And how those remaining investment vehicles finish out will kind of determine how long of a holding period before we see another round of money coming into that particular investment type. And finally, I'm an equity guy, so I was talking all equity stuff, but it is worth noting, this is an industry, the space industry, which, in the traditional SATCOM operators supported a lot of debt. But you didn't see outside government financing until the market crash of 2008. What is today BPI France stepped in and funded Globalstar at a time when they had a contract, with a French manufacturer, Thales Alenia Space. And that opened the floodgates to what was a good 5 to 10 year run where ECA financing was the thing, kind of like we talk about SPACs today. Congress kneecapped XM. They fell out of the market for a number of years. They're back, have a quorum, they're funded. Now we've got rising interest rates and equity, that's becoming more expensive. So do you suddenly see a resurgence of ECAs, Export Credit Agency funding, as the current trend? Keeps us busy, keeps me employed. So again, ask me in 6 months, I'll give you a different answer.
Great. But no, I think it's a great point. I think, Lightspeed and Telesat and the use of ECA financing there, both international and Canadian specific in the scale, and even going to the state of Quebec, so going beyond the national government level down to the province level. There are a lot of creative ways to raise financing. It's a great reminder that, markets do turn down, and when they do, governments can step in. There's actually a question, Courtney's asking, which is interesting, and Mark, it goes to you, a little bit about indemnification. But if you could see the question here about, what's the role of the federal government in protecting commercial industry relative to private, given what's going on today? I think the war, you touched on a little bit with the war and its impact. And Carissa actually picked up in your Antonov comment and had a question about that. So there are kind of two questions right at you, Mark, that I'd like to get your thoughts on.
I didn't see the question. I'm just reading it now. I mean, in terms of the indemnification, I think that it has been a very positive facilitator for development of, the commercial space market, and particularly the space launch market. And I think it's something that really gives gives comfort to a lot of prospective investors, because there is some sort of limitation. I mean, it comes back, I know, above the indemnification, but really in the financial exposure where you could have some loss. I think that indemnification really helps facilitate development of the space market. It worked previously, through the 80s and since the 80s when it was first implemented. And I think it's something that, could be there almost as it is now on a contingent basis, right? It's not, it comes in on top of commercial insurance. And so it's not just government subsidy, and it's really just that backstop in case something significant happens that can't be handled, by the commercial market. So I think it's been proven out to be effective, and would expect that, there'd be some appetite to continue that moving forward.
And Mark, when you say something significant, that's usually a loss of human life at some scale. Is that
Well, there hasn't. You look at the we're talking about third party liability here, right? So rocket goes up and crashes. In the States, or certainly in the Western world, I'm not aware of any loss of life that's ever happened from a launch failure. It's really been property damage, and frankly, it's been fairly marginal. There was suspected significant or some loss of life in some of the Chang launches, back in the day, but the license requires insurance of anywhere from $30 to $125 million, and then the government's in on top of that to the tune of about $2 billion. So, I would say something less than $100 million is significant, but something that the commercial insurance market can manage.
Great. We picked up, if we kind of take the Antonov comment and the question, this maybe I might broaden this especially to Tom, Stephen, and Jim, but there's the Antonov disruption and how big a deal that is for the launch industry. That could create new launch demand. But I think Mark hit on something earlier, and so did Chris, about supply chain disruption and its impact on the industry. Are any of your businesses, because of Ukrainian, Russian, or other or sanctions, is that going to have a material effect on your ability to do business, or as a publicly traded company, your ability to meet revenue targets? Does that come up as an issue? I'll start with Jim and maybe go to Stephen and Tom after that.
Well, selfishly, it actually helps us, not hinders us as far as our issues. We're not relying on either Russian or Ukrainian activities, yet the Ukrainian situation is actually causing a heightened interest in our launch vehicles and our capabilities. In addition, it's actually drawing some requirements and interest relative to using Cosmic Girl maybe as a special mission aircraft. So from our perspective, COVID was much more of an issue than this issue right now, frankly.
Interesting. Stephen.
Yeah, I would agree with what Jim just said. It's unfortunate, obviously, but at the same time, we're seeing a significant increase in inquiries from our satellite customers. A real need for another U.S. launcher to take this demand, and so yeah, we're seeing a lot of increased inquiries on this topic.
Interesting. Tom, I know you guys, Iridium's always been, maybe the first fallback, your phones and your IoT devices, a fallback when all else goes wrong on the ground. You were kind of the go-to place, wartime or otherwise. Are you seeing with what's going on in Europe and Ukraine specifically, are you seeing an uptick, and is it material to to your business?
We're seeing additional volumes in handsets, yes, in handset sales. And if you just think about our circumstance, right, the U.S. Department of Defense is our oldest and largest customer. So satellite phones and satellite modems are highly relevant in military operations. So the prospect of Germany, for example, rebuilding its military, forces of that size are going to be equipped with satellite connectivity, be it phones or modems. So that's our view.
Okay, great. And the military contract, EMSS, it's a fixed price contract, so you're not going to get a bump from the military side of U.S. consumption. It would really be outside of that you would get marginally.
That's right. Mm-hmm.
Great. Chris, something I was going to ask both you and maybe Mark as well, but we've seen, and you described it very well earlier, a shift from a geostationary, high EBITDA, very predictable satellite industry, venture capital, very rare 10 years ago, right? To now where we're seeing a constellation-driven economy. Jim was talking about that as well, how fast that technology's moving, how the barriers to entry to getting on orbit have gone down so much. You see Starlink up there at scale, you see OneWeb up there. You see a lot of the EO companies providing images in near real time. So there's a lot going on. How do you, if you kind of put your looking glass forward, this change, and then what does that mean in 2 years from a, will these constellations have to be replenished, right? The shelf lives of the satellites are much shorter than geostationary. There's much greater access. Are these constellations going to be making money, and can they fund themselves in kind of the next generation, or do you see that that there's going to be a need for a next wave of financing coming in a couple of years of external financing as opposed to lot
I
of
want
that
to hear
question, but
this.
what do you think?
So that's a really big question. And, if I were to answer it and break it down in two ways, there's the mega constellations, right? The LEO broadbands, the Amazon OneWeb, SpaceX, Telesat, Mangata, eSpace, thousands of satellites. They need billions of dollars. When you model them out, unlike Tom, at Iridium, where they have this sort of, they're building these satellites over a 3-5 year time frame, building and launching, put them on orbit, and then they've got a 10-year CapEx holiday, and then they recycle, right? When you have constellations of this magnitude, you never stop launching. There is no CapEx holiday. You're just going to continuously launch every year, all the time. And I think it does bring up the importance of launch, which is the critical factor. Lower launch. It's not only lower launch costs, right? Yes, people like to say SpaceX lowered the cost of launch by an order of magnitude, but it's also launch access. When you used to talk about small satellites, which are what comprise these constellations, it was a really niche market 10 years ago. It was like science and tech demo. People didn't really build small satellites. And the reason why? You couldn't get the damn things launched, right? Although there were a limited number of launch vehicles in the world, controlled by basically 3 entities, the Russians, the Europeans, and the US with ULA. And those rockets, which didn't launch often, were reserved for geosatellites, and nobody would even do a ride share. So, that's kind of one of the central issues. Like, if you can't get to if you can't launch and actually build and replenish a constellation, it's really hard to build a business model around it. So,
Chris, if you don't mind, I would argue also the capabilities of those small satellites back then were almost irrelevant relative to the capabilities now.
Yeah, absolutely. Look, it's not, when we talk about the large mega constellations, we've done an amount of research on that. I'm not going to pontificate on it, but these companies are going to need billions of dollars of revenue, and we could talk about where that comes from to justify their business model. You also have, we ran a list of over 300 smaller constellations doing everything from Earth observation, SAR, hyperspectral, IoT, radio frequency mapping, you name it. You boil it down, there's probably about 50 of those that are pretty legit, and that's a couple thousand satellites just there. Those companies, you're talking CapEx of a couple hundred or several hundred million, a much more manageable bite. But they too, are going to have to be in sort of a constant launch mode. And they've got to get a business model that works and generates cash, because at the end of the day, we've talked about the fact that the capital markets are flexible and there's lots of mechanisms, but there isn't a single segment of the capital market that has an appetite for businesses that lose money all the time.
Well said. That actually, Chris, that's a perfect tie into Seamus's question about the number of LV providers out there, right? You just described a very large pool of potential constellation launches of very different types. There are a lot of new LV providers in the market. 2 of the early successes here, Jim and Stephen. But I'd love to hear from both of you about, are you constrained by your own ability to supply these vehicles, or are you constrained by demand? Do you really think there's enough demand out there for you guys and the others that are that are building small and mid-sized, Stephen, launch vehicles. So Jim, first to you.
Well, I will say that kind of is an interesting thing is if you look historically, there's always been a lot of different proposed launch vehicles, et cetera, but they don't really materialize like you anticipate. And so I think that you'll see a little bit of consolidation, I think. Not consolidation necessarily, but just some won't make it. And I think that so if every one of them was available, I'm not sure. I think right now that demand wouldn't be, how do I say this? Supply would outstrip demand to a certain extent, I think, in the small market. But I don't think that's happening. And right now, demand is driving supply, which is a good thing. And that's what we're seeing right now in the marketplace. And if you look at the trend for small satellites, I don't want to, Euroconsult keeps predicting a certain amount, and it's always twice as many as what they predicted, and I think we're going to see that trend for a period of time. So I guess that the answer is that we're seeing a amount of demand going forward very high. But the real issue is how many launch vehicles are actually going to be out there, and how much is going to be driven by the larger launch vehicles versus the smaller launch vehicles. But right now, demand is outstripping supply.
Yeah, let me pick up on that. I think that very interesting question between a small purpose-built launch vehicle, Stephen, like Electron, versus a larger scale like Neutron. If you think back, Falcon 1 kind of, went the way of the dinosaurs, and Falcon 9 took over and is doing great. And now you've got Falcon Heavy, Starship, et cetera, kind of coming. As you guys are progressing, do you see Electron as a transition vehicle to mid-size and maybe larger launch vehicles because of the economics? Or do you see both, kind of to Jim's point, there's a lot of demand. Do you think both coexist at scale over the next 5 years?
Yeah, no, we are strong believers that both coexist. The Electron launch vehicle serves a very important role in the ecosystem. We kind of view that as our Pathfinder launch vehicle. So when companies, they're just getting started with their satellites, their constellations, they want to make sure their technology is working. Most importantly, they have a place to be at a certain time, and it's a very customized launch service. And so for that, Electron is perfect. And we think that, again, there will continue to be demand for that vehicle into the future. At the same time, we realize that what we're doing is we're launching these Pathfinders for what will be eventually larger constellations, and that's where the Neutron rocket comes in. And we really didn't want to, get the first satellites up in orbit, but not be able to partake in the constellation builds, right? And so that's where Neutron comes in. So so we're very excited about both vehicles, and we believe there'll be demand for both going forward. I think to respond to your earlier question, there are definitely no constraints on the supply side, right? I mean, we're able to build the vehicles to keep up with demand. So I think we're in a good position there.
Okay, great. Chris, did you want to say something?
Yeah, I just wanted to add a point here, which is, you talked about the supply side. We ran the numbers, and if you exclude the Chinese, there were supposed to be 13 new launch vehicles entering the market this year, blue delayed, so let's call it 12. But you could go back in the history, and in any given year, there weren't 12 discrete launch vehicles that launched in any given year, right? And this is 12 new ones coming to market. And I think the issue, again, there's not an issue with demand. There's not an issue with supply. If there's an issue, it may be with spaceport access, which is kind of a nod to Virgin's business model, because they have a lot of flexibility. On the flip side, we've also seen satellite mass moving upscale. If you just take SpaceX, they're 280 kilograms or something. Looks like they're going to 1,000. OneWeb is 150, probably going up towards 800 or 1,000 kilograms. Same thing is happening with a lot of the original CubeSat companies, moving up towards, ESPA or ESPA Grande class satellites. So the spaceport issue, which, is only exacerbated by Russia-Ukraine, because over the last decade, a quarter of all launches in the world went out of Russia. And I'm betting we're not going to see, Western payloads going up from those sites anytime soon. And so that's an issue that somebody needs to figure out and resolve. And it's not an easy one to do. If you just look at the history of, took what, 9 years from when SpaceX began the process in Brownsville, Boca Chica, until, they actually got launch licenses and environmental clearances and all those sort of issues. So that's the next big bottleneck.
That's a really interesting point. And Jim, if I think about what you guys have been doing, Japan and Brazil and the UK, I mean, both responsive launch and then, with Cosmic Girl, easy access to your spaceports are a little more numerous, right, than purpose built. But how important is that? As you see spaceport access, how important are those international plans to your business, right? Is that a big part of it, or is you're just serving kind of one-off issues and one-off needs?
It's actually, we always felt it was a big part of our plan. It's actually getting to be quite a much bigger part of our plan. And part of it is that we're, if people all know this, there's about 77 countries that have space agencies. There's only 10 that actually have ability to launch out of their own country. And we're seeing, and what we provide is that any country that can accommodate a runway for a 747 can now become a spacefaring nation. And they're starting to recognize all of what does that mean from an incubation perspective, as far as driving additional demand in STEM, additional demand in the space business. And we're seeing an emergence of several countries right now that are doing that. You're right. Japan, we already have a memorandum of agreement with, and we're moving forward on that. Brazil, we have a licensing agreement with them. We're going to be launching out of the UK. We're working now with Australia, Oman, Poland, Germany, and others. And it's going. And then the other aspect of it, which we're talking about, and one of the benefits of small launch vehicles, is responsive space and the ability to be able to fly unwarned. That is an unpredicted, and that's a huge deal. And by being able to fly from multiple different ports is becoming quite a capability, and we're seeing that interest because of what's going on right now in the world. So yeah, it's a big part right now, quite frankly, of our business and growing.
Yes, Stephen, I would add also one of the unique capabilities of Rocket Lab is we're one of the only launch company to have its own private range in New Zealand. So we're capable of launching up to 120 times a year in New Zealand, out of our own range. And just, I believe it's within the last month, we actually turned on our new launch pad at that facility. So we now have 2 operating launch pads in New Zealand. And then, of course, we have the one that we're planning to launch from in Wallops Island later this year. And then, as we discussed at the very beginning, we have the new launch pad for the Neutron rocket at Wallops Island as well, right? So we're definitely doing what we can to keep up with the demand and the points that were brought up by Chris.
Yeah, great points. We've got just a couple minutes left before we have to wrap. One thing that we've talked about a little bit, and I'll kind of throw this open, but might look to Tom to start and then anybody else to pick up. But government, President's budget just came out. We could see notable increases for pretty much everything space related. It'll be obviously back and forth with Congress, which came in a little bit different. But if you believe that, and you think that Ukraine maybe has changed the game a little bit, there's going to be more money flowing into government space. How, Tom, I think, government was a big part of Iridium's history and success. how does that change things for you, as either for the industry or for Iridium specifically, as you look at some of that, the money coming in, and then Iridium, which I know is both commercial and international government oriented. But I want to kind of ask you that question, and then I'll throw it open to others.
Yeah, we think our relationship with the U.S. government expands over time. We think we become increasingly relevant. We have satellite time and location functionality that is very precise GPS that the government is very interested in, and so we think we will expand our footprint there. You mentioned Iridium. We have lots of government customers, and we expect them to expand their relationships there as well.
Great. Stephen, let me ask you, government business as part of your business plan, when you look into your business forecast and your models, how important is direct government purchase of your assets?
Very important, and I think that is actually very. I think that's a very important point for the government as well. That it's a relationship where we really both need each other, right? And today, the government business represents about half of our revenue, and we believe that will continue to be that way. And then as Neutron comes on, we think that that will be an excellent vehicle for the government.
Great. Mark, anything you want to add as you look? I mean, can government, how important will they be in the industry, and does government help de-risk, some of the things?
Well, historically, the U.S. government has not been they've been a buyer of insurance, right? Either directly or indirectly. It's sort of been occasional. But what we're seeing, what some of our clients are seeing, what the industry's seeing, I think, is an attempt to move to a more commercial procurement environment rather than just doing the traditional cost plus with no risk, no liability. Some of the insurance buyers are trying to do things on a more commercial basis, firms fixed price with, maybe some final milestone payments at risk, or some sort of financial liability that the vendor has based on contract performance. So I think that they're becoming more of a player. Whether or not it evolves into a significant portion of overall market activity sort of remains to be seen. But there has always been some activity by non-U.S. government and space agencies. I think the CRS-2 contract, or the CRS contract, where they're buying that service, is a very significant development, right? And that was a change from the way NASA had done things in the past, and we're starting to see it's not going to happen overnight, right? And that's taken 10 years plus, right? And several administrations to get implemented. So I think you'll have that sort of medium range time frame that you'll see changes moving forward.
I think it's a real interesting point. And for the audience, NASA CRS contract is the cargo resupply for the space station. It's why it has a survey. We are, and I think that point, Mark, also on as the government moves to more service buying or commercial models, how that impacts the entire ecosystem, including financing and risk is a great one. We're right about in time, so I want to go back to Rob Shiga, who's standing in for Sally, to close this out. But is there any final comment from anyone who wanted to chime in before I turn it over to Rob?
I was just going to chime in one point on that, the government portion of the business, and interesting and obscure statistic. If you went back 40 years ago, the government spent $2 out of every $3 on semiconductor research. Today, the private industry outspends the government 40-1. We in the space industry are still back in the 1980s, relative to the semiconductor industry. This industry is wholly and fully dependent on government across, certain segments of the industry, like the Earth observation. It's north of 80% of revenues. The commercial aspect of that industry really hasn't come into force. And so we will remain a marginalized, niche, limited growth industry until whatever the service, whether it's launching or building satellites, delivering Earth observation services or communications, until we figure out how to make those commercially attractive, palatable, and growing portions of the business, where eventually government becomes, a small portion of the industry, it'll continue to be a marginalized industry.
It's a great point to end on. So thank you, Chris.
Well,
Rob, I want to thank everybody, but Rob, over to you for closing remarks.